Thanks for tuning into the trade setup. I'm Neeraj Shah. Good morning and lots of news flow. So let's dive right into it. First, the Fed minutes synopsis. The Fed is inclined towards more hikes to curb inflation. Almost all Fed officials backed a 25 basis point hike at last meeting. A few Fed officials favored a stronger half point hike as well. And the Fed saw upside inflation risks as key factor shaping the outlook. Well, uh, this was probably anticipated, as a result of which it didn't do too much damage to the US markets. And I'll come to that in a moment. But before I come to the markets, a couple of more updates in terms of global news flow. Meta plans thousands more job cuts across the company as per Washington Post. Putin says Russia, China reach new milestones on cooperation. And in fact, the Chinese official said that the Russia China ties are as solid as a mountain or as solid as a rock, whatever he used. And of course, India and China have agreed to promote further stability in the border areas. So there's lots that's happened on the global geopolitics and, of course, central banking action. I haven't quite mentioned what the Reserve Bank of India said, but that also was interesting because the RBI, 2 out of 6 officials, of course, didn't vote in favor of the continued hikes. And I think the Doves stated that there has not been a scenario seen wherein demand-led inflation really sustains, and therefore they are not in favor of rate hikes. If anything, they are in the favor of easing. It'll be very interesting to see how this side of the equation turns up, irrespective of what the Fed does. Remember, what is also important is that, as some people have said, that independent of what the inflationary pressures in India might be, the currency differential and the interest rate differential arguments would also ensure that, or could also ensure that the Reserve Bank of India stays on a tightening path or on a higher interest rate path if the Fed is going to do that. So that's the point that is very important. Now, the US markets, of course, were okay. You wouldn't feel that this was the performance on the back of a fairly hawkish Fed, but maybe some bit of the damage was already done. The other indicators will come up on your screen. Remember, yesterday we were looking at the 10-year yield at about 3.94, and it's around 3.92. So no big shakes there. The S&P the volatility index out there is down, despite our volatility index gaining quite a bit yesterday. The dollar index at 104.36. So in or about the range that we were in trade yesterday. So the SGX Nifty probably flattish to marginally lower or thereabouts, or 0.3% like, so flattish move really. Now, what is the trade setup for the day looking like? I think the trend support levels of the index have certainly been broken, suggesting increased volatility in the near term. I don't think anybody can tell you whether the index will certainly go down or certainly move up. What everybody can tell you, and I'll tell you as well, that there will be volatility. The zone of support is around this 17,350 to 17,400, which coincides with the budget session low and the 200 simple moving average, 200-day simple moving average. And therefore, that is the zone where you probably see the next support if the markets were to correct. So keep that in mind. I think we've seen continued pressure on banking stocks, with now private banking majors also joining the PSU basket sell-off, and which is probably one reason why the Nifty keeps on being under pressure. Now, yesterday the Adani Group stocks were again down and out, but that doesn't do as much damage to the index as Bank Nifty can do, and which is why, from a market-wide perspective, you look at the Bank Nifty and what that could do as the key determinant of what could happen. Now, why I say private banks in stress. You look at the performance yesterday as well. HDFC Bank and ICICI Bank were the top losers amongst the banking stocks, falling more than 1.7% apiece. ICICI Bank closed below its 200-day moving average EMA. Axis kind of took support at that level, but still closed at the lowest level in 4 months. Kotak Bank, which has not rallied at all, closed at its lowest level since July last year, clearly shows pressure at the banking end. So bear that in mind. What are the stocks in focus? Well, Zee, most certainly in focus. The NCLT has admitted Zee Entertainment to the insolvency petition on IndusInd Bank's plea. Now, for a lot of you who might want to understand what this would mean, we're taking a bit of we're doing a slight difference on the trade setup, wherein we're getting our in-house legal expert Paiswini to come in and talk about what this announcement could mean for Zee. Now, Paiswini, this was interesting that Zee has been admitted to insolvency the way it has. What do you think about it?
Well, that's right. The Mumbai bench of the National Company Law Tribunal has admitted Zee Entertainment into insolvency on the basis of a petition or application filed by IndusInd Bank. Now, the debt and default in question here has to do with the loan that IndusInd Bank had given to SL Group entity City Networks. Zee was a party to this agreement as a guarantor. The agreement required City Networks to maintain a particular amount in its account to service the debts, which it failed to do, prompting IndusInd to initiate insolvency against both Zee and City Networks. On Monday, the NCLT admitted both into insolvency. Now, the next obvious question is what happens to Zee's merger with Sony now? Well, as an immediate consequence, the merger processes will come to a standstill now, since the moratorium has kicked in, which prevents transfer or alienation of any assets. From here, Zee essentially has two options. One, it can try and arrive at a settlement with IndusInd Bank under Section 12A of the Insolvency Code, which allows for withdrawal of an application. But once the creditors committee is formed, any settlement will require an approval of 90% of the COC members by value. Also remember, there are two other financial creditors, Axis Bank and IDBI Bank, whose insolvency application against Zee is also pending before the NCLT. So Zee may have to also look at settling with these creditors as well. The second option is to, of course, appeal the NCLT order before the appellate tribunal. From what experts tell us, these chances here are quite slim. It can try and rely on the Supreme Court ruling in Vidarbha Industries judgment, which essentially gives NCLT and rather insolvency courts some discretion. But from what we gather from experts, the chances of setting aside an application at this stage are quite meager. The biggest question, of course, in all of this is that as Zee navigates through this, either the settlement process or the appeal process, will Sony be a patient partner?
Thanks for that, Paswini. And that's important to notice or note that will Sony be a patient partner and wait for Zee to come on board as it clears all of this mess? Or so therefore the big question, viewers, is this only a standstill or a temporary standstill in the merger process, or could this morph into something bigger? Well, let's wait and watch. Zee was under a bit of pressure yesterday. Remember, this news is not post-market hours, came in just around market hours, if you will, just around there. But I reckon maybe there could be some tremors felt in today's session as well. Let's see. I've seen a couple of notes talk about how this will not be a big issue. I somehow beg to differ, but let's wait and watch. Biocon is the other one. Kotak Special Situations Fund invested about 1,070 crores in the company. The funds will be utilized by Biocon subsidiary Biocon Biologics to fund its acquisition of the biosimilars business of its partner Viatris. So therefore, Biocon, which took a wrong end of the stick yesterday and was down and out, was trading at probably 52-week lows, has some positive news flow to it. Mahindra CI, the numbers are a bit tricky, if you will. So revenues were up 34%. Normally it would seem impressive compared to the estimates, much lower. Now EBITDA up 62% at 292 crores. Normally you would see that's a fabulous performance. Again, lower than estimated. EBITDA margin are higher than estimated because the revenue growth also is much lower than what was estimated. So if you ignore the EBITDA margin line, and you should ideally, then the numbers, while impressive on the face of it, compared to Bloomberg estimates, a lot lower. I do not know how the market reads into this because optically the numbers seem really good. There is a net loss, of course, of 657 crores, but that's also on account of a loss of 923 crores on fair valuation of assets and liabilities of discontinued operations. I would say, looking at the texture of the market, these are not the numbers that will rejoice the street. If anything, lower than estimated and a large net loss because of one-offs. All of these are potent combination for the stock to not do well. I don't know if it really cracks too much. Very difficult to say that, I must admit. At least I can't say this for now. Normally, things give a clear picture. This one doesn't. But likely that it might have a slightly tough reaction, despite the fact that on normal basis, the numbers are not looking all that bad, just that they are much lower than estimated. Sugar stocks could be in focus because raw sugar has risen amidst the India supply risks and the Brazil port congestion. So that continues to rise and that continues to maybe favor the sugar companies. Let's wait and watch. Some 9 ethanol plants signed yesterday or day before as well, all of which shows the continued focus of the government on ethanol, which is actually auguring well for the sugar companies as well. Um, Oil has held its longest losing streak this year on the hawkish Fed outlook, and therefore ONGC and Oil India could be in focus. Remember, yesterday too, oil was down. It's not that ONGC and Oil India cracked too much. If anything, they were steady. So I don't quite know if there's a bit of a reaction to this or no, but thought I should point it out. Orient Cement and Adani Power, the non-binding MOU between Orient Cement and Adani Power in Maharashtra for establishing a cement grinding unit at Tiroda stands terminated because Adani Power could not obtain the required MIDC clearances for subleasing the land required for the facility. Maybe Adani Power, which cracked yesterday, could see some further downticks as well. Who knows? Maybe Orient Cement too could see a little bit of a downtick. AG Infra Engineering, the company has been declared a preferred bidder for 466 crore project. Typically, infra companies which have gotten these things have tended to do well. So let's wait and watch if that were to happen. Um, okay, there is a yep. I think there's a by the way there's a UBS note on Z which says that it's overall a negative development. So be mindful of that. Uh, I was just trying to see if I missed out on something else which I should be monitoring. Not too much in McLeod. The Khaitans get interim NCLAT relief, ex-promoters. So maybe McLeod has some reactions today. But aside of that, it's a day which isn't the biggest in terms of news flow. The Z's, the banks, and all of that would be in focus. Volatility of the VIX spiked up, and therefore Indian markets could be uh, a bit of a focus as well at large. And then and and watch out for the 17,350 to 17,400 zone as a key support area from an index-wide perspective. So that's the long and short of it. We have a bunch of interesting conversations today. Mahesh Patil, CEO of Aditya Birla Sun Life AMC, would be on Talking Point at 10 a.m. today. So that is something to watch out for. Tomorrow we have a special with Ramesh Damani. So that comes up, and that is something we want to monitor as well. And some corporate conversations, of course, during the course of the day today. Thanks so much for tuning into the Trade Setup. Have a fabulous day ahead.